start off with InterGlobe Aviation, which will hold an extraordinary general meeting today. Rakesh Gangwal has sought some amendments to the company's rules that could end his dispute with co-promoter Rahul Bhatia once and for all. Soumeet Sarkar is standing by to tell us what's on the agenda and its potential implications for the airline. Soumeet, why has the RG Group called for this meeting?
Well, the EGM is requested by the Rakesh Gangwal Group to amend the Articles of Association so that the promoters can sell their stake in the company, that is InterGlobe Aviation, the parent company of Indigo. Now, earlier the two promoter groups, that is Bhatia and the Gangwal Group, signed a shareholder agreement in April 2015, which placed a restriction on transfer of the equity stake and or acquisition of new stake in the company. Now, the said restriction was in place for 4 years from the date of Indigo's IPO, which ended on November 10th, 2019. And hence, this EGM has been moved by the Rakesh Gangwal Group. So, if the resolution in the EGM is passed, then the Gangwal Group could look to sell its full or majority stake in the company, thereby removing the overhang of the promoter dispute. Now, the Gangwal Group currently owns nearly 36.6% stake in the company, which is valued at close to 21,000 crore rupees. And why this is an overhang? Because this dispute among the promoters has led to a fall in the share prices of Indigo of nearly 5% since the first time this reports of promoter dispute has been reported. And this is despite a strong financial performance reported by the company over the same time period. And that is the reason why today's EGM is so important for the company and for the shareholders and for the investors.
Soumeet, are there any things that one should watch out for? And, assuming that this proposal is passed and the Rakesh Gangwal Group is allowed to sell their stake, any sense about who the potential buyers could be?
Well, firstly, Rahul Bhatia, who is the co-founder and the promoter of the company, who currently owns nearly 38% stake in the company, might be interested in buying some stake through using its right of first refusal that he has. Now, this could be done by him to avoid a presence of another strong investor on the board and the issues that he had faced earlier with Rakesh Gangwal. So, to avoid that, he can increase his stake up to 45% from current level of 38%. The second possible buyer could be Qatar Airways. Now, as time and again they have shown their interest in the company. Now, they had first shown their interest in 2015, and sometime back also the CEO had clearly said that they are keen to buy as much as stake possible in the company. Now, recently Qatar and Indigo also signed a one-way code share agreement, which according to Indigo could be converted into a two-way depending on the success of this one-way code agreement. Also, Qatar owns stake in other airlines like China South Airline, Cathay Pacific, Air Italy, International Airline Groups, and Latin Airlines. So this could be one of the potential buyer, that is Qatar Airways. Secondly, similar to Qatar Airways, the US-based Delta Airlines could also be a potential buyer, as they're looking to increase their presence in the strong aviation, in the good growth of the aviation market in India. Now, this company also owns a stake in various other global airlines like Aeromexico, Virgin Atlantic, Air France, China Eastern, and other companies. So these three could be the potential buyers for Rakesh Gangwal's stake in Indigo.
Okay, and I heard you mention yesterday when the numbers came out that people were largely bullish, but the stock had an indifferent behavior. As we head into this EGM, how are analysts viewing the stock?
Well, I'll tell you about the valuations that are currently present. If you see the current 12-month forward EV to EBITDA of Indigo, now that stands at around 7.7 times. Now, this is at a discount to its previous average of 12 times. Now, this average is since the listing of Indigo that was done in 2015. The average has been around 12 times, but currently the share is trading at around 7.7 times. And one of the major overhangs on the share price of InterGlobe Aviation has been this promoter dispute. But a possible resolution among the promoters could take the valuations higher going forward. Now, the 12-month consensus target price for Indigo, if you see, that suggests only a potential upside of 10%, but the recent calls from the big brokerage house do suggest a potential upside of nearly 25 to 40% for Indigo. Now, Morgan Stanley has a target price of 2,057 rupees. Ambit Capital has a target of 1,993. Credit Suisse, ICICI Securities, and CIMB have a target price in the range of 1,800 rupees to 1,900 rupees. So these target prices do suggest a potential upside of 25 to 40%, and all of these brokerages have said that a potential overhang on the share price has been this promoter dispute. So if it resolves today, if it won't resolve today, obviously signs of resolution if we get today, it could be we could see some upside coming in for Indigo from current levels, because if you will see the crude prices that have come off significantly, so that's a positive for an airline company, because nearly 1/3 of the cost is related to crude prices. So there are positives for Indigo, but it has not, the share price has not been moving because of this promoter dispute.
So you're saying, Soumeet, there are near-term triggers in terms of crude prices, and if indeed this promoter dispute shows some signs of resolution, a long-term overhang on the stock might also go away. That's the sum and substance of what analysts are saying.
Exactly.
Okay. Well, we'll watch out for InterGlobe Aviation today. Thanks a lot, Soumeet, for putting that into perspective. It's been a busy one for InterGlobe Aviation, I must say, and if indeed the meeting outcome happens post-market hours today, it'll be interesting to analyze this yet again tomorrow. But it's just that kind of a stock, right? India's largest airline per se by market share in the private side, and therefore an important one to assess as well. 1 month returns of about 8.5%, hasn't done too badly, but still has that overhang of the promoter dispute. If that goes away, maybe, just maybe, that's a positive.